Hi, everyone, and welcome. I'm Ohad Samet. I'm the CEO of TrueAccord, and I'm going to go over a few questions and answers that we've received following previous webinars and some questions that we've received from clients and prospects over the past few months. So question number one, how has COVID-19 impacted collections? Let's talk in a general sense. COVID-19 has deeply challenged the call center model. Many of our clients and others in the industry have struggled with moving large call centers to working from home. There's a setup issue, there's a connection issue for a lot of agents to work from home. There's an issue with PCR compliance, limiting the ability to take payments on the phone, productivity with kids at home, and just the setup to work from home is not very effective. So we've been hearing that call centers are at about 60 to 70% capacity, and that may be getting worse over time as turnover is hitting those call centers and as performance issues begin to present themselves and so on. So it's definitely been a complete challenge. And beyond that, the whole idea about coming back to the office is a challenge of itself. When you come back, the same space is not going to be enough for the call center because agents need to be 6 feet apart from one another. So floor plans are going to have to change. So generally speaking, having a lot of people responding to phone calls from consumers and especially making outbound phone calls is going to be a huge challenge and is a huge challenge already. Now, in terms of TrueAccord, we've been able to feel the 50% growth in collections volume month over month with less than 10 new hires in operations. That is because 96% of our resolutions are completely automated, and that number is going up. You can see this is the graph of visits to our website of monthly active users. You can see the nice bump at the top around tax season, the drop around the stay-at-home orders, and then the continuous climb around stimulus checks and with clients giving us additional accounts. We've been able to handle the additional volume with adding more, basically server capacity, contacting more consumers using our automated system, and hiring a few people in the call center to be able to handle inbound communication. Similarly, you can see payment plan volume. This is an actual graph from our system. We track our performance on a very granular level on a daily basis. Open rates, click-through rates, different channels, consumer response rates, payments, payment plan signups, the whole conversion funnel, and so on and so forth. So this is one of the views that we use to track our performance. This is a weekly view, and you can see how the number of payment plans started, peaked around the late weeks of February, around tax season, again dropped around the weeks of uncertainty before the stimulus hit, and since the middle of April has remained high thanks to stimulus payments and additional accounts placed by our clients, better open rates thanks to our distribution system, distributing our email and text messages being sent to consumers. So overall, like some others in the industry, we've seen a lot of additional business, and that business has been basically absorbed by our automated system. How is TrueAccord different than other agencies? Let's think about what is a traditional collection agency. It is basically like a telemarketing campaign, right? We hire a lot of people, we pay them a low base, high commission, we give them a list of accounts, we put them on a dialer, and their goal is to call those accounts 2, 4, 6 times per day per phone number, get the consumer on a cold call, and convince the consumer in the most compliant and hopefully in a pleasant way to pay as much as possible or to commit to a payment when they're on the call. This has a lot of limitations. It's about contacting consumers on the phone, which is something that we know is becoming harder and harder because consumers don't like to answer the phone. It is about keeping them on the phone and having that talk off while they're on the phone, not an experience that many consumers want to have. And it is about setting up payment arrangements that are hard to work with, because again, they're mostly phone-based. If the consumer wants to make a change in their payment arrangement, many times they need to call in, they need to call a special line that with an agent that tries to keep them on a payment plan. These were reasonable ways to address customer care and address collections, but with the change of expectations from consumers, it's just not the case anymore. And call centers are struggling to deal with the scalability, with consumer expectations, with the move to digital, with the pressure on cost, and so on. When you look at TrueAccord, in contrast, our system, we use a patented engine called Heartbeat that, based on debt parameters and consumer behavior, decides who to contact, when, what time, through what channel, email, text, letter, phone call, in the rare case where we actually trigger a phone call, voicemail placement, push notification, and so on, what payment offer to put in front of them, and then tracks their behavior in real time on our assets to decide how to continue to refine the messaging and the conversation. It is like an automated sales and marketing campaign. And so the call center that we have, even though the people on there are trained as collectors, is more of a customer care function that deals with the most sophisticated or complex cases that the automated system cannot handle. It is a complete shift in strategy. Consumers can engage on their time of choice, they can engage with their device of choice, they can engage with their channel of choice, they can be in charge and in control of their payment arrangements, and they can do that all from their phone. If they start a payment plan and they want to sign up, and they want to customize the payment plan because their cash flow has changed, they can do it from their phone on their own using their dashboard. They don't need to contact us. If they want to set up a payment arrangement, if they want to negotiate a settlement, if they want to change their contact preferences, all of these things are available for them in a self-serve model. It is a complete shift in perception of what collection is all about. And concurrently, we also see an improvement in Net Promoter Score, in customer satisfaction, in consumers that consider that TrueAccord is actually helping them pay their debt, and so they choose to pay a creditor that uses TrueAccord more than they pay a creditor that uses a more traditional collection agency, because of the convenience and because of the brand recognition. How does our machine learning engine work? Now we talk about Heartbeat, our patented machine learning engine that decides, based on historical data and consumer behavior, what channel to use, what content to use, and so on. But what does that mean? Well, in the simplest way, think about Heartbeat like an automated agent. When you put an agent on the phone, a new agent on the phone, they start calling consumers, they start getting consumers on the phone, they start with the talk of, obviously you gave them some training, some basic training on compliance and about how to talk to consumers. However, they're not good on day one. They have to start experimenting. Use this word, use that word, make the phrasing their own. Be able to learn what objections they hear from consumers and how to react to them. They get better with the talk off. And indeed, in human collectors become better over time, right? The most tenured collectors are often the best collectors, sometimes 10x better than a new collector. That makes complete sense. Heartbeat is like that. Every time it interacts with a consumer, it says, well, do I try to talk to them today? Do I try to talk to them tomorrow? Is now a good time or is later a good time? Should I try an email or should I try a text or should I try a phone call or should I try a push notification? What should I tell them? Should I offer a settlement or a payment plan? Should I ask them for a payment in full? Should I give them a payment vacation? Now, all of these options are available to Heartbeat, but how does it make a better decision? Well, one, when it needs to make a better decision about whether to contact a consumer, it can compare that consumer to 11 million consumers who've already passed in our system. Right? So it can compare and can remember all of that data of what worked and what didn't work for everyone that came before the consumer that it looks at right now. As humans, we tend to forget. We tend to have what's called recency bias, meaning we remember predominantly what happened lately, and we act based on that. And we just don't have the ability to remember 11 million cases and hundreds of millions of interactions. So Heartbeat can use all the data to provide real data-driven treatments at scale to a lot of people at the same time. The other thing is that even though as humans, we're very good at responding to edge cases, um, Heartbeat and machine learning systems are very good at responding to the happy path, right? So if someone has a really complex issue and they don't know how to use an online service and so on, yes, they should call our call center or talk to a person. But the vast majority of people just want a personalized communication through their channel of choice to reach a payment arrangement that actually works for them. And Heartbeat can deliver that without getting tired, without getting distracted, without fighting with anyone, without worrying about whether it's making its goals or not, and whether it's making its commission or not. So it's very good at focusing, using data and delivering service, where humans do get distracted, do get angry. And so even though humans are good at treating edge cases, Heartbeat is much better at treating the majority of cases, which is what drives liquidation. You can even see that in this graph, and this is a little bit technical, but let's look at it a little bit. The x-axis here is days since the accounts were placed with us. And every series here, every line on the graph here is liquidation rate, right? The percentage of dollars collected out of dollars placed in a portfolio that was placed with us by the same client. So these are the same accounts. And you can see that the older portfolios from April of 2019, from May of 2019, have a certain curve. And the younger portfolios, the more recent portfolios in this graph from August and September of 2019, have a steeper curve. Why do they have a steeper curve? Why do they reach a higher collection rate earlier? It is because Heartbeat is learning. And much like an agent getting better on its stock off, Heartbeat is learning the behaviors of the consumers for this specific client and can choose better contact methods, better timing, better messages, and better offers over time as it accumulates more data to get better. This is a great example. It's a very visual example showing you how the system actually learns over time. Now, why does TrueAccord win against traditional solutions? We talked about Heartbeat, we talked about automation, we talked about all of these personalization options that we offer consumers, and this is exactly why TrueAccord wins. Because our system is able to provide personalized, data-driven treatments at scale that are digital first and mobile first and are convenient for consumers, because it offers a lot of customization payment plans and payment arrangements according to the client's definitions of their settlement authority and the length of payment plans that they would accept. Heartbeat is able to get 75 to 100% more payers compared to traditional collection agency. Right? So more consumers get on more payment arrangements that in turn, they actually stick to a lot more because they have those very convenient tools to do from their phone to be able to adapt their payment plan and move their payments around if something unexpected has happened. So as you can see in this graph, TrueAccord is the dark blue series. The others are traditional collection agencies. And you can see that around month 4, month 5, the traditional curves start to flatten. Agents start getting tired of these accounts. They don't want to call them anymore. The consumers identify the phone numbers and they don't pick up the phone anymore. People fall off payment plans and don't get back on them. However, for TrueAccord, Heartbeat doesn't get tired, so it continues to message consumers, although if they're not responsive, by the way, less and less frequently, because we don't want to get on their case and be in their inbox or on their phone too often if they don't want to contact us that often. And this is also data driven. And also it gets a lot more consumers on payment plans, and those payment plans start compounding over time. Consumers just continue to pay and to pay and to pay. And this is why you see our curve not only separating from the others, but also continuing to grow over time, even 12 months after placement. Another thing that's important that we don't talk about a lot in that collection is brand perception. you have three different debts, and those three different debts are serviced by three different collection agencies, and you have some money and you can pay, and those debts are your credit is already in problem. You want to pay all of these debts. You want to improve your credit score. Who do you pay first? What we're seeing is a company with 4.8 stars on Google, with a great Better Business Bureau review, with these reviews gets paid first before other vendors. And you can see on the bottom right, this person is saying, even during this pandemic, I felt a loyalty to pay you back. Consider that, loyalty to a collections vendor. This is exactly what we're trying to do. We're trying to create a brand that consumers can associate with good service so that when they do have money, they come back and pay us first. This is what we're seeing happen now. These are a few numbers that we like to quote, that we like to show on the effectiveness of the system. And this obviously also contributes to this separation from the competition. Our ability to scale, our ability to resolve a vast majority of accounts automatically, the high open rates, the high click-through rates on emails and text messages and other digital messages, our data from the millions and millions of consumers we've interacted with, all of these are assets in our ability to offer this level of servicing at scale that actually works for consumers and works for creditors. What is TrueAccord's approach to compliance? Obviously, compliance is an extremely important topic in the collections business. We have clients that are major banks, super regionals, large debt buyers, other financial institutions. It's very important that we stick to the rules. Of course, we want to do that as well, and also be ahead of them, reduce risks, control them, and so on. We get audited often by our clients. We're being held to a very high standard, and we would not have it any other way. Now, the first step, we think, before even rules and regulations, is about reducing and in some cases eliminating risk when you can. So for example, by almost eliminating outbound phone calls, by relying a lot less on the phone channel compared to other channels, we are significantly reducing TCPA exposure. But if you're not calling every phone number a few times per day, then you're obviously not creating a lot of TCPA exposure by using dialers or by contacting consumers multiple times, by maybe alienating consumers with a quite aggressive phone-based strategy rather than a digital one that they can control. Added to that, and we've talked about our brand before, when consumers have a positive view of the TrueAccord brand or the servicer's brand, they tend to come to us first if they have an issue. They don't tend to try and look for gotchas and try to catch us and try to sue us on small issues. And we know that that is sometimes part of the issue because of the way the FTCPA is constructed. So good brand perception and reduction of risk exposure are two important things that happen even before we start talking about compliance. Now, granted, we have our compliance firewall that allows us to control every communication, its frequency, whether we contact consumers or not, what disclosures we put in the communication, and there are rules that control that based on locale, based on licensing, based on the life of the account, based on the product, and so on. We do have our internal control and compliance team with lawyers, with paralegals, with auditors, and so on, continuously improving our internal controls and our ability to work with our clients and with regulators to just continue and identify issues, develop detective and preventive controls, and continue to improve our ability to control what's happening in our system, which thankfully, because it's code driven, is many times much easier to identify issues in and control issues in compared to a call center that is often very hard to run analytics on because voice calls are very complex. Now, beyond all of that, there's the relationship with the regulator. I myself was in the consumer advisory board for a year, and hopefully maybe in the future, We had an open relationship with CFEB. We've attended their Project Catalyst meetings and every other forum that was available to us to express our opinion about debt collection. We stay ahead of federal and state regulations, and in general, we have a very proactive approach to compliance and how we think about it internally and externally. In addition to that, policies and procedures, our ability to onboard as a vendor with major banks is something that we've had a lot of practice on, and we know how important compliance is. It is important for us, and it's important for our clients. How quickly can one get started with TrueAccord? So, as you know, we have 2 product offerings that could be relevant to you. One is our pre-charge-off service, where we offer our technology, our ability to reach out to consumers using your brand, using multiple channels. And for that, we could be up and running in as little as a few weeks, just approving the treatments, the tools that we need to be, and triggers that we need to be aware of to message consumers correctly around their process of collections. When do you report to the bureaus? When do you close their account? What do they owe? How can they pay? And so on. We'll set up the payment flow so that you can actually get paid and the consumers know who they're paying, configure the integration. And for many, many of our clients and prospects, we can work with their dialer file plus maybe a couple of columns that are very easy to get. So getting started can be as quick, as fast as 2 to 3 weeks. On the post-charge-off side, where we offer third-party servicing, we understand there's a little bit more complexity with third-party agencies involved. We have vendor onboarding capabilities, great client success team and implementation teams that are able to get through the RFP and all of these requirements, run the P&P, the policies and procedures, gap analysis, and close those as we move towards implementation and going live. And finally, the data exchange. We work with integrators, and we have our own internal capacity to ingest data, to send back data on a daily basis, weekly basis, and reconciliation and so on, to support the type of transparency that you would need to enable working with a third-party vendor. We estimate that process to take about 2 or 3 months. We have seen it as short as 1 day for clients that could work in a very straightforward integration using our programs, our PNPs, and so on. And of course, with top 10 banks, it can be longer than that with vendor onboarding and so on. But we are ready and we are fast, and we would love to work with you on that. Thank you very much for your time. I hope you've had your questions answered. Please feel free to reach out to us at sales@trueaccord.com with additional questions. Have a good day.